Now in this video, we're going to go over first how it helps the client. It's going to help them understand exactly how a life insurance policy works. If you start to talk to average Joe walking on the street, what life insurance does, they're going to tell you that life insurance is for my beneficiaries, not for me. Well, we're going to change that. What we're going to do is we're going to focus on exactly how it can help them personally. So we need to change the dynamic of this conversation. We're going to debunk any permanent myths that your customer may have, because they listen to the media, they listen to the Ormans of the world that talk about how term's the best way to go and permanent policies are not something that you should have, right? You should buy term and invest the difference. But we both understand that that's not the case. For you as an agent and advisor, it will provide a clear understanding of life insurance being offered. And this isn't a 30, 40-minute presentation. This only takes 10 minutes to do in front of your customer. It discusses the benefits of all types of policies. So you're letting them know exactly how a term policy works and a permanent policy works, but you again empower your client to make the best decision possible. So when should you use this? When should you start talking to your customer about the life policy description? Well, any life conversation that you have, anytime that you have the ability to talk to your customer about life insurance, this is the exact method that you want to use in bringing up the conversation. Build a foundation first before you start talking about all the added riders and other little bells and whistles to a life policy. Then they'll say absolutely. So this is the exact sales method that I'm using. So what I'm going to do is I'm going to break this up into 3 different columns. Okay, so it'll be term, return of premium, and a permanent policy. Now the numbers that I'm using are not the customer's numbers. You never want to use the customer's numbers. What you want to do is you want them to focus on the concept and not the price. So if you're putting their exact numbers in these columns, what's going to happen is they're just going to say, wow, the term policy is so much cheaper than the permanent policy. And that's the last thing we want to do. Well, for that 20-year term, you would pay $300. Return of premium would be $800. And the permanent would be $1,300 per year. So that's the cost that your customer would pay each and every year going forward. Now, right off the bat, what is your customer thinking? Well, shoot, I want the term policy and I don't want the permanent because it's $1,000 more expensive, right? Well, let's fast forward 20 years, Mr. and Mrs. Client, is what I tell them. Let's fast forward 20 years and let's talk about when this customer is 60 years old. If they pass away within that 20-year time frame, all policies work the same in where the $100,000 death benefit will be passed along. But what we care about is the 20th year, after that duration is all said and done, right? So, Mr. and Mrs. Client, let's talk about that cash value. On that term policy, you don't have any cash value that's being built up into the policy. It's that life insurance is only for a term. After that term, the money that you put in went to the cost of insurance and you have nothing out of it. Return of premium works just like the name says, so you receive a check for $16,000. It's like taking that money, putting it under your mattress, and not being able to touch it for 20 years. Now the way that the permanent policy works, and there's different ones, there's the whole life, universal life, and so forth, but in essence, the way that it works is we take the $26,000 that you put into it, subtract the cost of insurance, and either pay a dividend or an interest rate depending upon which policy it is. And if we maintain the same dividend option, you would actually have a cash value of $27,000 that you have access to. So if you do need life insurance, I need to ask you, Mr. and Mrs. Client, what is your health going to look like in 20 years? Well, the fact is we don't know, right? We don't know. Hopefully we don't, but we could have high blood pressure, diabetes, God forbid cancer. All these things would make us uninsurable or would affect our insurability, right? Well, if we're wanting another term policy in 20 years, we need to go through the same underwriting standards that we went through 20 years ago. And the fact is, we're not sure exactly what our health is going to look like. That will impact our insurability. Same thing with return of premium. We need to go through the same underwriting standards we went through 20 years before. Well, what about the permanent policy though? The fact is, you don't have to go through underwriting anymore. The one time you go through it is the only time you'll have to go through it based on that policy. The reason why is because, Mr. and Mrs. Client, it is our promise to you that as long as you keep paying that $1,300 per year, we're going to pay out that death benefit regardless of your health moving forward. But let's just say that you're in perfect health. Let's just say you're running marathons, triathlons, doing whatever you do. Let's just say you're in great health. Well, let's fast forward another 20 years, Mr. and Mrs. Client. Let's just say that you don't pass away from age 60 to age 80. Because if you did pass away, all three policies work the same where we pay out that $100,000 death benefit. So what we want to know is, first, how much did you pay? But then we'll talk about the benefits after that 20th year. Well, the cost from age 60 to age 80 on that term policy would be $34,000. So I'm just taking the $1,700, multiplying that by 20. So the total amount that you paid into it was $34,000. Return of premium, $66,000. And again, on the permanent would have been $26,000. But since that never went away, the total amount over that 40-year time span that you paid into it was $52,000. And that's why I have it in parentheses. Well, let's just say you're 80 years old now and you do need life insurance. Our hope is that you don't need life insurance. We hope that you don't need life insurance because you're self-insured. But the fact is, there may be still a need for life insurance, right? And if there is a life insurance, what is our job? Our job is to make sure that you have the ability to purchase life insurance, or at least have it at age 80. Well, regardless of health, can you purchase a 20-year policy at age 80? They're not insurable. Regardless of your health, doesn't matter who you are, you cannot purchase another 20-year life insurance term policy. Return of premium, same thing. You can't purchase it. But what do you have with that return of premium policy? You have $66,000 to your name. Now, in essence, you are self-insured. Just take $25,000 and store it away for a funeral and do something else with the other $41,000, right? But what about that permanent policy? Do you think you're still insured? Absolutely. You still are insured. You still have $100,000 in coverage that's still insuring your family. But what else do you have? You have $82,000 to your name. The only one of these three policies that actually doesn't help you personally, Mr. and Mrs. Client, is the term policy, because you paid over $40,000 you paid into this policy and you got nothing out of it. It's just the peace of mind that you're paying for. So that's exactly what I want to show my customer on exactly how the life insurance policies work. But the most important thing is I want to show them two different questions. I want to propose two different questions to them. This is the first question. The first question is, I say, Mr. and Mrs. Client, if price was not an issue, which policy would you prefer and why? Right? So if price was not an issue, which gets rid of the objection of price, which one would you prefer and why? And then I just stop talking. The answer undoubtedly would be the permanent policy. And then I ask them why. And they tell me, well, the cash value builds up that I get to use. You don't have to check my health in 20 years. The cost doesn't get up. Oh yeah, and I have cash value in 40 years. The fact is, a lot of your customers will not say that they're still insured at age 80, or at least they have a death benefit on this side. The fact is, your customer will focus primarily on the benefits to them. Cash value, the health, cost, and again, the cash value. So that's exactly how the policy works. This is exactly how the sales method works that you want to show your customers. Now, let me actually go back for a second. A lot of my agents and advisors that I speak with about this and show them, they become a little intimidated on the numbers that I'm using. Now, I've done this 5, 6, maybe even 700 times with customers, and I'm understanding exactly how the numbers work, and it comes off very easy for me. But there was a time where this was brand new to me personally. So all I did was I wrote it all out in my own writing, and I brought it to the customer and I said, hey, Mr. and Mrs. Client, do you mind if I show you a quick sales idea that I showed someone else previously? Their answer, absolutely. The numbers were already written out. All I did was I just covered it and I just told a story. And I just went down, row by row, going over exactly how the policies work. Over time, I became more comfortable and then was able to show my customers exactly how this works just on a yellow pad of paper and just started to write it out. You can do exactly the same. This is the life policy description that I highly recommend that you use with your client.